Friday, December 8th, market analysis, Stan Ehrlich. And you guys know I start out with the indexes typically, and today is no surprise. Currently 9:48 California time, squeak past the middle of the trading day. So I have been saying for a couple of weeks now that the indexes look like they are about ready to start a downside correction, a dip for approximately 2 weeks. 2 weeks from this Monday is Christmas, and the Santa Claus rally starts the buying process a few days just before Christmas and lets go of the long positions in the very early part of January. That's the traditional basic concept I have been talking about and showing you, and I will continue to do that, not necessarily today, the exact timing, time of day, and dates, and the track record that goes along with it for probably the E-mini. That's what I'm working on. I used to use, and still could, the Spider, which has an excellent track record. Now, today we rallied up enough in some cases to make a minor new high for the move up. But so far, that rally is not particularly holding that well. We've been lower on the day a few times since the high, and right now just slightly higher, 80 cents, 65, 87 on the Spider DIA and the QQQ. So it would be very easy for it to slip back down to negative territory. And if it can, and there's a chance, get lower than yesterday's lows, we've already been pretty close on the E-mini, get lower than yesterday's lows, we will have another set of red bearish engulfing sell signals that, like I said before, and it didn't work so far, that should start the move down into the Santa Claus rally buying time frame. I'm very much expecting that, just because the market is ever so slowly since the 20th of November moved up slightly on the average, doesn't mean that we're going to not have that correction. We still should have the correction. New highs, yeah, but it's not really getting up there, staying up there, and following through with a real big, strong up rally. We are still in this resistance area. So I can't help it. I still got to talk about it topping out, the parts of the process, and see how it is developing, and I'll tell you about it. Next chart is the S&P Spider, and it is also in a resistance area. Now, at the moment, it's right around those previous highs the last several days, basically this week and Friday of last week, and it made a higher high. So it could have a bearish engulfing, and if it starts to slide below this little blue line right here, well, that should be all she wrote, and starting a 2-week, give or take a little, decline. Next, the Spider 1-minute chart shows us that we weren't able to hold on to our new short on Thursday, and this morning in the wee hours, yesterday at the rally high, unfortunately, we got bumped out. Now it doesn't look like that bad an idea because we're trading equal to or have been higher. So kind of glad I'm out at the moment. Small loss. Maybe we'll get another signal on the DIA daily data chart. The sideways trading range is less time frame, but overbought constantly in the last month, which is very unusual. And it's just cruising for a bruising, in my opinion. Today, if we get lower than yesterday's low, we will turn red again. A couple other signals didn't work very well or at all. Frankly, pretty much not at all. But ER1 might have made a very small profit. So I'm looking for a turn down on the DIA, probably in the area of 345. Next, Russell 2000 came up. The high today is almost at our buy stop which is an offsetting order because this morning we sold it short. The sell signal was on Wednesday. The rally high yesterday was just a little bit too short of getting into our new short trade, but this morning we got there, went through it, got a little scary when it came close to the stop, went back down, was a small profit a few minutes ago, and now a teeny weeny loss momentarily. So we're short the Russell. Next, QQQ. Still in the topping out price range for the last couple, 3 weeks. Could have a bearish engulfing. Unfortunately, it won't be an official ER sell signal because it wasn't overbought within the last few days. We want to get back down into the support area and close below it in order to close a gap and start to move down to probably the ballpark level of 360. Next, NASDAQ futures, pretty much the same as the Qs. Broad double top for the moment, but I don't think it's going to end up being a double top because you have to break below that low right there in order for it to kick in another downside objective, which would be way down in here someplace. I don't think that's going to happen. The Christmas rally could start right around in this price level here on top of the previous bear trend line, which was the top of a down channel or, maybe a wedge, very elongated. But that seems to be a very likely level. It's relatively good support. It's a decent 50% or so dip back down. And again, close to the top of this line. And if it's a few weeks from now, maybe I'm a little too low. Next, Russell, 1 minute. I'm going to go to the futures markets now. And we start out with the E-mini different perspective. Yeah, the higher high. And at the moment, still around where it has topped out in the last week or two. So I think it's about to do it again. I'd love to see this market get below yesterday's lows. I will have a whole variety of sell signals if that happens. But it hasn't happened yet. I know what to look for, but it's not happening. So I got to wait. Next, NASDAQ. Pretty much the same comments. Broad double top, overbought conditions, resistance area, looking for a move down. Next. Now the bonds and the notes. We are extremely close to getting stopped out of the bond trade that we got into on October 25 because of the bullish engulfing buy signal buy signal on October 23, the bottom of the bond market to the exact day. So I'm looking forward to taking a really nice profit if we start to make new lows, which came extremely close to bumping us out of the trade, but not quite yet. Support, we bounced off of it. But the problem is we've gotten up to very high RSI levels and officially overbought for the last 2 previous days. And we got to my minimum upside objective area. So all of it looks like probable downside correction, which would fit with the Santa Claus rally because bond futures going down, the stock market doesn't particularly like. It implies that rates will be going up a little. We'll see what happens. 10-year notes are the same situation. We're long from essentially the bottom of the market on the notes with an ER green buy signal, and it's up against resistance, getting a little tiny bit above it yesterday, and now starting to work its way a little bit lower. But our stop is down here, so we're not hit yet. Still a great long trade like the bonds. Next, crude oil. Oversold conditions could now be catching and support. We're rallying a little bit this morning. Not overly impressed, but that's the way it begins. So I'm looking for a move up, minimum 75, probably back up to about 80.13. Next, natural gas. Oversold for a week or two, should start to rally anytime. No particular evidence of it starting yet, but we could get a buy signal at any moment. I'm waiting for buy signals for a rally back up to the resistance level. And this is a long-term bear market, then probably new lows after that into January. Next, heating oil. Pretty much the same comments. Now for the 3rd day, we're sitting mostly below the bottom of a previous wedge or pennant, and that is not particularly bullish. The only thing saving it here is the oversold condition. Not going to say too much more that it looks like it's going to make lower lows, but I should see some sort of bounce first. Or maybe it'll go sideways and then down. Next, gold. I screamed bloody murder on Monday, both gold and silver. That was a huge bearish engulfing, turned red, of course, bearish engulfing, bullish buy signal, ER signal. That was a bad one. We had a very small loss on that trade, very small. Bullish on the bottom, bearish on the top. That's why I built the system ER signals. Bullish on the bottom here. This is huge because of the size and the price location and the level at which it got overbought. Not necessarily the size of the price range, but because of those other features, I think we have a relatively decent chance of coming all the way back down to the October lows. And that would be again back down to 1,870-ish. Next chart is silver. Almost everything's the same. Resistance area, gigantic bearish engulfing ER sell signal, and every single day this week has been down, and today is a whopper. We are down quite a bit. And that signal on Monday, we got short at approximately 25.45. And ER1 overnight, still short. ER1 scalp made a very good day trade, got out at the end of the same day, December 4th. ER3 never got short, never had a rally up to the little red dots, and we're missing the ER3 trade, which would have made a lot of money, but that's the way it goes. Next, platinum. I talked about the outside up day yesterday, and maybe we'd get a little bit of rally out of it, but we're in a bear trend, and I didn't have much faith in it. So we got a very slight higher high today than the last couple of 3 days. And the current quote is the middle of the range, not, particularly strong or anything. I'm basically neutral to bearish on platinum, partially because of what gold and silver are likely to do, in my opinion. And platinum did stop close to some resistance, and the trend is down. So looking for lower levels. Next, high-grade copper. Not too sure about high grade. It's getting caught between a rock and a hard spot, bouncing back and forth like a ping pong ball here. I'm going to let this go until I get a better feel for what's going to happen next in high-grade copper. Next is soybeans, and we did get, and I said so yesterday, a buy signal. Now, today, a few minutes ago, we got back down low enough to get into an ER3 long position. So we are long an ER3 scalp, and we are long an ER3 overnight trade. Right now, the scalp is just a small, teeny loss. I need it to stop dropping, turn around, and rally as much as it can by the close of business today. That'll make money on the ER3 scalp and put our brand new long in a good position for the position trade, ER3. So I'm turning friendly. I wouldn't say bullish, really, on soybeans. Remember, there's a giant problem here, and that is this 1 year possible broad double top. There is a lot of support in the area that we started to drop into already again, and you don't have a major downside long-term breakout until you're down below 1088. And here we are at 1302. So it's got a ways to go before we get a crash. And I said 1302, and the bearish breakout is at 1088. That's a huge move down just in order to break out of this gigantic, close to a 2-year formation. The two tops are a year apart. Next chart, soybean oil. Did have a head and shoulder top, did work very nicely. It got down to 50 and a little bit under 49. Down to about 48. And we had a bounce. We're out of our short. We're flat at the moment. I'm waiting for something new to develop. The trend recently has been down, so I have to vote for down a bit. The next stop would be the previous lows of 47.78, and then probably a move down to 41.90 in soybean oil. Next chart, soybean meal. Again, something like, but not as big as soybeans. Broad double top over, let's see, most of this year. And support is holding so far, but not very well. We're almost in a new low here for the break and almost below the last significant support area. So I think this is going to continue lower. And I'm looking for probably something close to 343, probably in the 350s. Next, corn. We had a buy signal on November 29th, turned green. 1 day up, 2, 3, 4 days in a row up, then a little bit of a dip. Yesterday was up again, and today we rallied early, and we're a little bit lower on the day right now. It doesn't look at the moment like this rally is over, but hey, you got a bear market here. There's no sign of any long-term turning point. So I have to look for lower lows in a while, and maybe they're coming up pretty quick. This rally was just barely enough to satisfy my curiosity, so to speak. And we did get stopped out. We're not stopped out yet, but we have a profitable trade in progress. Let's see what happens to this. I'd love it if it made new highs again. Next, wheat. It did get to resistance and overbought at the time. That's Wednesday. And even though there was a little higher close yesterday, today we're turning around again. And we might even get a bearish engulfing out of this. I'm not sure. Today's high is 645, and yesterday was exactly to the tick on this continuation contract, the exact same high. So we cannot have a bearish engulfing. The high today is not higher than yesterday's high, but close and overbought and resistance. So this could be the beginning of a downturn. Live cattle, oversold, starting to bounce. We've seen this stair-stepping down market, got oversold, rallied a little to resistance, then got new lows, oversold, rallied to a little bit of resistance, got oversold and rallied back up to previous lows again, got oversold just the last couple of days, and today starting a little rally. That, guess what, just might do the same darn thing it's been doing for a couple of months. Next, live hogs. Somewhat similar, a little broader time frame, broke support, came back up to and through it, but still no higher highs over a significant period of time. Another resistance stopped the rally, and we started to work our way down. Momentarily, we're a little higher on the day, but still below yesterday's low for today's low, and not very far away from the lowest low since June. I think we're going to see lower levels and get a little bit oversold periodically on the way down to test 57. Next, OJ. We did get stopped out of our great new short sale at the top of the market, the second time that we had a top with a bearish engulfing. The first time was October 31st, and it went straight down for a few days, bounced off of support. Second time, up to a new high, November 21st, turned around. We got short ER3 and ER1s. Big move down. Finally, we're on now flat as of today's rally, and we're waiting for new signals. My comment longer term is we could be developing a big long-term top. OJ has been very, very high. They've had some kind of disease, green tree, I think it's called, and the Florida orange juice crop, and that has caused orange juice to keep soaring higher and made Brazil, where we get most of our oranges now, very happy. So we'll see what orange juice does. They may get a handle on this disease, and that should be longer term bearish. Next, cocoa. Outside up day, came down, closed the little gap from yesterday that I mentioned, and then popped right back up again. This looks like it's going to make a new high and going to get overbought again. This is stair-stepping its way up, not down. Next, coffee. Resistance stopped the rally. We had on Wednesday a new low and a new low close, a small bounce yesterday, and now we're slightly lower. I think we're about to make another minor new low for a week and a couple of days and work our way down to probably 165, which looks like decent support, and maybe into this bigger trading range of June, July through October. Next, sugar. Well, support is trying to hold, doing an okay job in oversold condition, but it didn't really hang in there very well at the support level. This could be turning much longer term bearish if we start closing below 22. For the moment, oversold conditions probably is going to cause a little rally. We'll see what happens after that. I'm looking for a possible 25, maybe 25 and a half, but this is kind of iffy. Lastly, cotton the rag. That's a ping pong ball back and forth. So I'm looking for a little bit more strength today, a minor dip, support held. We'll see what happens next. Not too sure about what's going to happen with cotton. And back to the E-mini. Remember, I'd love to see these green numbers right now, only up 83 cents, 67 and $1 on the Qs, turn red, lower on the day, and get below yesterday's lows. That would produce more major sell signals. You guys have a great day. Don't forget, we're going to be buying the indexes approximately just before Christmas in a couple of weeks. See you Monday.